The title of the next presentation is ESG Investment Strategy for 2022. The speaker is Mr. Komatsu Mikita, President, Daiwa Asset Management Company Limited. To introduce to you the speaker, after graduating from Hitotsubashi University in April 1985, he joined Daiwa Securities. In July 1989, he moved on to Daiwa Switzerland. In January 1995, he transferred to Daiwa Europe Limited. In January 1998, he switched to Daiwa Securities America. In October 2008, he became President and COO of Daiwa Securities SMBC Europe Limited. In April 2010, he became Executive Officer, Head of International Planning of Daiwa Securities Capital Markets Company Limited. April 2019, he became Senior Executive Managing Director, Head of Global Markets of Daiwa Securities, and Deputy Head of Wholesale Division of Daiwa Securities Group. In April 2020, he became Deputy President, Head of Global Markets Division at Daiwa Securities Company Limited, and Deputy Head of Wholesale Division of Daiwa Securities Group, Inc. In June of the same year, he became Head of Global Markets of Daiwa Securities and Deputy President of Daiwa Securities Group. And since April of 22, he has been in his current position. The floor is yours, Mr. Komatsu. Thank you for the kind introduction. I am Komatsu of Daiwa Asset Management. J alert has been issued since early this morning, so we've had bad news despite this great day of celebration, but I am here up on the stage successfully, and I would like to thank the organizers of the Tokyo Sustainable Finance Forum. We have a history of about 60 years. We are asset manager, equity, fixed income, REIT, balanced funds. We offer various products and services that meet the needs of the clients in a timely manner. And we also offer services that take advantage of the expertise within the Daiwa Securities Group as we offer diverse products. 23 trillion yen of assets are being managed by ourselves. And through asset management, we are trying to help the beneficiaries in their mid to long-term asset formation. That is our mission. So, distribution between equity and fixed income, not just that, but the investee corporates' mid to long-term value creation and sustainable growth are important key factors. For companies to elevate sustainability, and they have to be aware of G, and also balance that with S and E, and that would lead to, in turn, the realization of a sustainable society. At Daiwa Asset Management, based upon such concept, when making investment decisions in corporate valuation, which is important, in addition to financial analysis, we take up sustainability and various ESG factors as we have established evaluation method. And even when we take advice from outside external asset managers, we check whether those advices are embedded with ESG factors and whether the values of those external organizations are well aligned with the set of values that we embrace. The Tokyo Metropolitan Government offers financial awards, and Carbon Zero, we apply through Carbon Zero in the financial context, and as a good company in green finance, in the ESG investment, we received the special award of the governor. And in Carbon Zero, Candriam, which is Belgium-based, is offering us advice. Last month, I visited the company in Brussels, and we found that they are at par or places even heavier weight than ourselves in ESG as they make investments. So the necessity of ESG was adopted by the United Nations in the form of PRI, and that improved the awareness. As of June 2006, the signatories of PRI was 5,020, and the AUM of those signatories $120 trillion. And in 2020 in Japan, stewardship code revision had taken place, and that explicitly mentioned the necessity to take into consideration sustainability. Companies engaged in ESG as a cost factor, and they didn't think that it would lead to increase of enterprise value. And there were many who were skeptical of ESG investment. Regarding the necessity or benefits of ESG investment, there are mixed views, but demonstration and research still continues. In evaluating a corporate value, if the span is short of 1 or 2 years, then all you need would be financial statement related information. Maybe. But quantified data through financial statements would focus on this year and the last year, and the information perishes. But on the other hand, ESG-centered environment, society, or adaptability and safety for the stakeholders, purpose, vision, and culture. These are non-financial information that are of great importance even for the company. So companies need to take a longer horizon, and therefore use by date for such information is longer than financial information. And if the time span is longer, in the evaluation, the importance of non-financial information rises. So, can ESG become a source of return? Putting that aside, in mid to long-term investment, without considering non-financial information, it's no longer possible to make effective investment decisions. ESG evaluation and intangible assets would be a good measure for the potential and risk and opportunity for companies, we think. So in the mid to long run, we think ESG benefits the company and would also lead to higher return on investment. When PRI was adopted in 2006, we immediately became a signatory, and we focus not only on financial analysis based upon financial information. We began to be actively engaged in ESG investment using non-financial information. Tangible assets that are reflected in financial statements versus non-financial value that are not reflected in financial statements exist, and recently the intangible asset value is increasing. Patent, intellectual property, the skills of workers, such human capital are included in non-financial. But according to all challenges of the United States, 90% of the values in the United States, intangible assets, 75% in Europe, 55% in Korea, 47% in China, but in Japan, only 32% is accounted for by intangible assets in corporate value. Very low. So disclosure of intangible assets in Japan is not enough. And intangible assets are undervalued in the market. That's probably the reason why. So ESG-centered intangible assets must be more rightfully assessed, and that's necessary and essential for corporate value. And at the same time, disclosure is not enough. So engagement and dialogue with investee companies is of great importance. And in early September, I went to Candriam, Belgium, and I also went to the United States and Europe and met with 6 CEOs of asset managers and CIOs and PMs. We discussed investment strategies, but all of the investors and asset managers talked about the importance of engagement. In the market, we think that company value should be assessed properly. And in order to elevate corporate enterprise value and prevent conflict of interest, we are engaged in active engagement. Non-financial intangibles must be evaluated to truly reflect the potential of the companies and the possibility for growth. In July, we announced our alliance with Drucker Institute, and this agreement is, in this context, well positioned to more rightfully reflect those values in the corporate valuation of our investee companies, and that's what asset managers are supposed to be doing. Because of ESG becoming a fad word and people seeing the importance of taking non-financial informations, ESG has been embedded into many investment trust products and financial instruments. But there are different degrees in terms of consideration and weight placed on ESG, and there are many products that are greenwashing or ESG washing, but calling themselves ESG funds. So one of the challenges is improving the disclosure of ESG. Sustainable finance e-regulation on sustainable related disclosure in the financial services sector, SFDR, and Article 8 fund, Article 9 fund have emerged in Europe. So such a category and taxonomy has been well rooted in Europe, and the affiliation in which category is also disclosed for financial instruments in Europe. We're trying to do the same in Japan, and the Financial Services Agency will probably offer some kind of guideline in the supervision policy. Carbon Zero, SFDR, Article 8 and 9. We have a fund that follows the same strategy as those funds in Europe. So, as I said, appropriate evaluation of intangible assets and non-financial information of investee companies must be done. That would lead to elevated corporate value, and in turn, value for the beneficiaries is very important. And that is how we wish to contribute to asset formation in the mid to long term for our clients, and we will continue with such policy. Thank you for your kind attention.
小松様、ありがとうございました。
Thank you very much, Mr. Komatsu.